Yo, this is Joel Davis,
And I'm Gracie Davis,
and this is Greater Than Real Estate.
where we go deep to find out who you really are beyond real estate. Welcome to Greater Than Real Estate. Today we have a special guest, Michael Standard, the Hero Loan Expert. So Michael, go ahead and tell us a little bit about yourself, where you grew up, how you got to Texas, and how you got into reverse mortgages.
You bet. Good afternoon, everybody. Michael Standard here with Hero Loans, LLC. And Hero Loans actually stands for Home Equity Retirement Option Loans, LLC. I started off in a lumber community in Oregon. It was Springfield, and we moved out to Pleasant Hill. But all of my relatives were in the lumber industry, and they worked for Weyerhaeuser. And so I know how to run a chainsaw and cuss really well. I can do all those things blindfolded almost. And so I started out there and did a lot of fun stuff, but one of my passions was hunting, and the other was music, because that was where we grew up. They actually had traveling bands, so we would actually travel all over the nation. And I went to Hawaii one time, and I'm a kid from a lumber town. Getting to go to Hawaii was pretty cool.
Yeah.
So make the story a little shorter. We decided, Mom and Dad decided, that I wasn't going into the woods. So I thought, okay, well, I've got a passion. I love helping people, so I'm going to go become a doctor. So once high school was over and I worked my way through college, I was up in Portland, Oregon, and going to go to Oregon Health Sciences University as a pre-med student. But one of my jobs, and this is always fun to talk about, back in the day, they didn't have Indeed, and they didn't have a recruiter. So you'd actually have to go to the facility and look on the job board. Well, there was a job there for a morgue diener. I thought, what in the heck is that? So I applied, and I got interviewed, and they said, well, what you'll be doing is autopsies. I said, great, I'm a pre-med student. I love that type of stuff. And then he said, well, this guy's name was Mike. He said, Michael, have you ever, been around bodies, and have you ever, butchered things? I said, yeah, I'm a country boy. Of course I butchered things. And so did my first autopsy. It was easy. Did that for 7 years.
Wow.
So that was fun. Very interesting, I should say. Wouldn't say fun.
Yeah.
Some days I couldn't eat red meat afterwards, for sure.
Oh.
But, yeah, and I did some really, really peculiar ones too, ones you never forget.
Yeah.
But it was a great growing experience. And then I was getting ready to take my MCAT, and I was getting married at the same time. And health maintenance organizations, HMOs, started about 2 years before that. So that would have been in 1985. And I was talking with my doc friends, and they were saying a lot of our friends are going out of business, closing down their practices because you can't make any money anymore. And so they swore me off of going into medicine. I said, well, what should I do? They said, become a pharmaceutical rep. You love to hunt and fish. Doctors love to hunt and fish. You can take them out hunting and fishing. So I started applying for those jobs. And at that time, I still was at the hospital and also selling suits at Nordstrom's, and just finishing up college. And I was interviewing for all these pharmaceutical positions. And I had a degree in microbiology. Okay. Not that I knew a lot, but I had a degree in microbiology. And they basically said, no. Every time I'd interview with them, no. And I had hair back then, so it's kind of surprising. And it come to find out that whole industry had shifted too. And they were looking for cute girls. I was not a cute girl. I said I would shave my legs, but I wasn't going to get implants. And so I went off to, one of the guys said, well, if you had more sales experience. I'm thinking, more sales experience for a college graduate? I have plenty, but you know, it was just another excuse, another roadblock, but God had a plan. So I went to New York Life for 3 years and loved doing that. And it was a lot of fun. I learned a lot and was able to help a lot of people with, financial planning. And I actually had licenses, not just a life license. So I was doing financial planning. I had a 6 and a 7. And that led to my wife saying, I never see you anymore. You're always gone, which I was from 7 to 11 o'clock usually. And yeah, long days.
Wow.
But I had a lot of hair back then, a lot of energy, so it wasn't a problem. And so we then transitioned. I transitioned to the bank brokerage industry. So I was a stockbroker for Bank of America. And I learned a lot there too. And the thing I learned was I loved helping these seniors because most of them were seniors who were retiring or lived in that community on the Oregon coast. And that was a lot of fun. My favorite part was when they'd come back in and find me at my desk. They sit down and we talk about their grandkids and how to make the best berry pie and how many fish they caught out of which fishing hole. And so that type of stuff, I love that. And in my role there, I just continued to do well. God continued to bless me. And they'd had, if listeners will know, if they've ever worked in the banking industry, they'd had probably the 4th commission change and the CEO left of our division,
Wow.
the program manager. And so 75% of us left as well because they were going to put us on salary. And as a stockbroker, you're not supposed to be on salary.
Yeah.
And so from there, I went to Wells Fargo, and I learned my lesson that I'm not good at politics. I am a redneck in a suit. And when you tell me what to sell and I don't think it's appropriate, I'll call it bullshit, which
Yeah.
it was. And so I was on the naughty list, even though I was in the top 3 in production. I was always on the naughty list because I didn't do what the managers wanted me to do because they couldn't make their bonuses if I didn't sell their crap, which I refused to do. And so that led me to understand that this wasn't the role for me. And so I started into a new career where I was selling software to broker-dealers. And so if you are familiar with some of these banks like Regions Bank, Dreyfus Funds, AIG, those types of companies, I worked with them. I sold them the software that they needed to process commissions, process annuities. But my favorite was the compliance tool that we sold and developed. This guy from Dreyfus Funds, Bill Germanis, he's passed away since. He and I met at a conference, and from the conference, we decided we could build a real compliance tool that would check every trade and watch for things that are illegal according to the SEC rules. And he and I built one for his company, and he was using it very well. And then I resold it 43 times because it really worked well. And so everybody who had a big group of stockbrokers needed to check all the trades and make sure they're compliant and have the reports to show to FINRA in the day. And so we did that. And then I transitioned to an accounting software company and did that for a while too. But there was just that lack in my life there. I just didn't feel like I was accomplishing my goals. And of course it was fun, great money. The kids traveled with us and they got to see all the museums, as they called them. And every place we took them, which was usually DC or the Eastern Seaboard, those types of places, but it was good for them. And from there, I think it was about 2016, I just needed to do something, needed to make a change. And so I had a coach, and the coach said, well, why don't you talk to my brother-in-law? Her brother-in-law used to sell the old reverse mortgage. And he showed it to me. And I didn't have my CFP, Certified Financial Planner, and plus I dropped my license about 10 years prior to that. But as a certified financial planner, you use the reverse mortgage as part of your planning tool. And he showed it to me, and the light bulb went off. So this is a planning tool. This is how you use the debt equity in someone's home to help them meet their financial goals or live out retirement in a better way. And so he said, well, it's going to change completely. In 2017, they're going to change it. And he said, he's retiring. He retired. And so they did make all these changes. And the changes were great because they basically did 3 things that really changed the whole landscape. They kicked all the banks out of it. No bank can do it anymore. And banks have to make money because they have shareholders. So banks were back in the old days taking people's houses because the interest they were charging and wouldn't let them refinance would run up and it would be upside down. So the other thing they did after they kicked out the banks was they insured it. It's forced insurance, okay? Cost of doing business. But that makes it so that clients never lose their home. So if you were to inherit, Grace, if you were to inherit your dad's home and he had a home equity conversion mortgage on it now, if it were upside down, if the loan balance was higher than you could sell it for, the government eats the loss. Because back in the day,
They would just take it.
they would take it or the kids would have to file bankruptcy. And California was fraught with bankruptcies in 2008 to 2012 because of Obamonomics and what it did to the industry. So Now it's forced insurance. The other thing, it's age-based now.
Yep.
They used to be able to take 80% of their equity out in the old days. Now it's based on your age. If you're 62 in the state of Texas, you can only have about 38% of your equity to use. At 95, you can have 75% of your equity.
Yeah.
And there's no life limit on it. So if you're over 100, no problem. And I've done them for people in their 90s
Wow.
because they ran out of money. You know, in fact, it was an old CEO of a big distillery on the West Coast, and he said, we didn't expect to live this long. So he did the home equity conversion mortgage. Now has a pile of money to use. So that was a benefit to him. So the three major changes really helped, but the reason why I'm passionate about it is because 2 out of 3 seniors lose their homes. Now, one goes to Medicaid, one goes to the nursing care facility, and the other people either have enough assets or they plan correctly. So we can talk about those statistics too, but the other
Yeah.
thing I wanted to mention is it is a new loan. It's called a home equity conversion mortgage.
Heckams.
Heckams. And the benefit is to the federal government, really. Because in the old days, and even now, there's $12.5 trillion of equity in seniors' homes. And 50% of them lose their homes to the state. $6 trillion. Well, so here's how it works. You fall and break your hip. You go to the hospital. To leave the hospital, you have to prove you have long-term care insurance or $200,000 in assets to leave the hospital to go to a facility, care home, rehab home, nursing care, whatever. If you don't, they make you sign an attachment, a waiver, Medicaid attachment, which is a waiver stating that me as the person with a broken hip going to the nursing care facility, rehab, doesn't have enough money, and you can take my home when I die. So
Wow.
HUD, Housing and Urban Development, then gets the home when they die, and they sell it on their auction site for pennies on the dollar.
Wow.
So just as an example, I was looking at the HUD auction site because I like properties, I like to invest in properties. They had one up north here for $431,000 listed, and did the comps. It's about right. It sold for $278,000. So Medicaid loses in the state.
Yeah.
So, and when Ben Carson, who was the head of HUD at the time in 2017, when all these rules changed, he said, we have to change this loan so seniors can age in place and not lose their homes to Medicaid because Medicaid is broke. Medicaid doesn't make money, they lose money.
Yeah.
And the house goes to the state auctions it through the HUD website, they get pennies on the dollar. So they made these changes so your kids inherit the home. The kids have 12 months to sell the home or refinance and keep it, and it's going to be sold at retail prices through a realtor, right?
Yeah.
So they're going to get fair market price.
Yep.
And so the kids then pay off the lien, and then they get the rest of the equity. So it's a benefit to the government if people use this loan because they're not going to go in the hole because Medicaid is broke.
Interesting.
Yeah.
Wow. So I want to talk a little bit about the stigma of reverse mortgages or Heckams. Why is there a stigma of people taking advantage of the older generation when it comes to these types of mortgages?
Well, I think that in the past there was some stigma, and I've heard some stories. The worst story I ever heard was my aunt lost. This guy tells me his aunt lost the home, and when she passed away, they were going to go in and get some of the collectibles out of the house. Well, the door was locked because the bank owned the house because it was upside down.
Yeah.
Because they had charged such high interest rates, and a lot of people don't realize that you can refinance these once a year. Okay. In 13 months, you can refinance it and see if you can get a lower rate. So, but that's part of the problem. And I think the biggest part was the lady in 2006 in Chicago. She got in front of some news cameras and said, the reverse mortgage company took my house. Well, what had really happened was that she hadn't paid her property taxes in 3 years.
Yeah.
And the city took her house for back taxes that she wasn't paying.
Mm-hmm.
And she said, well, the reverse mortgage company was supposed to pay those for me. No, they weren't. It's in writing. It's very clear that you pay your own property taxes and homeowner's insurance. So those types of stories get out,
Yeah.
just like other stories. And people love bad news. They love bad news. So right now, it's kind of our job to educate seniors and help them understand that it's not the same, that the reverse mortgage was killed. They killed it in 2017. It's brand new now, and it's something that everybody should look at and consider as part of their financial planning tool.
Mm-hmm. So, what are some of your favorite stories about clients that you've been able to help through this process?
Oh my gosh, you've heard one already. Young lady in outside of Houston. I can't remember the name right now, and her name's Corey, and she has a little dog named Puff Puff. And she had put her two granddaughters, putting still one, through Texas A&M out of her own pocket.
Ooh.
And she hadn't paid her property taxes in 10 years. And she, of course, owned her house outright.
Yep.
So she wasn't paying homeowners insurance either, because a lot of seniors don't, because she couldn't afford to live and put her kids through school. Okay. So we were able to connect with her, and it was a real blessing to her, because now we paid off all her back taxes, repaired her home to get it up to FHA standards, and she still has the cash flow now to help her last granddaughter through college.
Wow.
So that was a fun one.
Yeah.
That was a really good one. And there was another one where a lawyer got me involved. The dad, he was 93. He had broken his hip, his pelvis, in fact. And how it works in most states is when you go to the hospital and then when you get released, remember we talked about the Medicaid attachment. Well, he couldn't afford the nursing care facility, and they had $42,000 left in their bank account. And that was it, and their house. And so we took Dad off of the home's title and left him on the Medicaid roll, where Medicaid would pay for some of it, but she didn't want Medicaid to pay for it. So we did the home equity conversion mortgage, or their house was paid off. And we were able to then take the equity in a line of credit. She had about $116,000. She took $40,000 out, put it in the bank account to continue to pay for his care. And because she was only making $548 in Social Security per month, she used that other to supplement. Because when you go on Medicaid, your Social Security goes with you. Okay, they let you spend down to $2,000. They leave you a wedding ring, a car, and $2,000. And in the state of Oregon and Washington, they give you $118 a month from your Social Security. In Texas, it's $75 a month from your Social Security.
Wow.
30% of our seniors in Texas are losing their house in that fashion.
Wow.
It's sad. But here's a good story. So a guy up here outside of Plano, he was meeting with his financial advisor. The financial advisor suggested he talk with me, because in his situation, he wanted long-term care. They were in their mid-70s. They could still qualify for it, because he found out his family members weren't going to take care of him when they aged, and they wanted to have in-home care. They didn't want to go to a nursing care facility. So we were able to take his mortgage, pay it off through the home equity conversion mortgage. So he has no mortgage payment anymore. He's able to take $600 of that $1,100 he was spending with the bank. Now no mortgage payment. He buys long-term care insurance. So now he can age in place.
Wow.
His kids got involved with it too, because they didn't trust it. They'd heard bad things. So we had a long counseling session with them, and they understood that this was in your parents' best interest, because now they're going to not only be able to age in place, but they're going to save the house from going to Medicaid or from having to sell it to go to a nursing home. And so now the kids are going to inherit the home. We calculated in 10 years, the house will probably be worth $720. Okay. It's not a big house, but it's a nice house. And so if they pass at $720, the kids will get about $400,000. Better than nothing,
Yeah.
which is what
For sure.
most families are faced with, is nothing.
Wow.
Yeah.
That's
Yeah.
crazy. That's such a cool, it's a cool way to help people, especially in a time of need. I think in our, in our world, the older generation is kind of pushed off to the side and kind of just said, well, you know, you're old now. We don't care,
Yeah.
which is really sad, you know?
Yeah. Absolutely.
Our culture, the American culture, isn't quite set up for helping mom and grandma and aunts and uncles age in place, come
Yeah.
to your house or whatever. You know, I know there's ADUs now that their FHAs is working through that process, allowing people to build ADUs, alternative dwelling units,
Yep.
on their properties. But this is just an opportunity for us to reconsider where our parents are at, our friends' parents are at. And the other big deal is downsizing.
Yeah.
Because, well, real life story, my in-laws are in their 80s and they live in Oregon still. And we just thought that it would be best if they came down here near the family. Of course, he's very resistant. But we took them to some of the 55 and over communities in our area, and they were blown away. My mother-in-law was thrilled. She was so excited. They're all single level. They have a pickleball court, a workout pool, a swimming pool, and they take care of your front yard and your backyard. And they could easily get in to this community. I mean, the house we looked at was $520,000. That would have been at that time, it's based on interest rates as well, but that time they'd have to come up with about $340,000. And they could live in the home for the rest of their lives, make sure it transfers to their kids, okay, and grandkids, and then not have a mortgage payment. So for them, it's great because you keep title, you don't have a mortgage payment, it goes to your children, and if it's upside down, the government eats the loss. How could you lose?
Yeah.
Mm-hmm.
And you live in a nicer place where she was already picking out the colors, and she was going to put her painting desk near this one window, and he was going to put his guitars and computer in the other room so she didn't have to hear him, and he was happy about that. And, it's just a transition process for people. But seniors and our friends and family members, they get to a point where they can't take care of their houses. I mean, you've driven by those houses. 15 years ago, they were awesome. They had the pool and a tennis court or something for the grandkids, and now the grandkids are grown up, and the pool's a wreck.
Yep.
The tennis courts are mossy, and, the roof needs to be repaired. Well, they can't afford it. They're on a fixed income.
Yeah.
Well, why don't we ask them to move? Here's an option. Downsize into a retirement community or in a 55 and over community or something that's comfortable for you near your family members. And then that will give you the opportunity then to live your best life in retirement because your house is uncluttered. It's safer.
Yeah.
And now you have the option to make sure it goes to your kids or grandkids.
Yeah. That's really good. That's
Yeah.
awesome. Yeah. So let's kind of come back a little bit. Tell us about your family. You were showing us pictures of your
Oh, yeah.
grandkids earlier. Give us a little backstory on your wife, your kids, your grandkids.
So I met my wife on a blind date in college, and she thought I was going to be a doctor, so she hung on really, really tightly. Right? But we've got 3 great kids. My oldest still lives in Washington, and he works for Fisher Investments, and he does very well. He's got our granddaughter up there, and then I've got another daughter in Austin, and she's now a new mom, and so a 3-week-old, and she's doing great. And then my youngest lives here in Mansfield, and she works for a big manufacturer of equipment that produces cardboard. But the best part is they all love the Lord.
Yeah. That's awesome. So how long have you and your wife been married?
34, almost 35 years.
Wow. That's awesome.
What advice would you give to a young married couple?
Why are you looking
About
Why are you
marriage.
looking at me like that? No, I'm just kidding.
I'd say the key is fight fair. Fight fair.
Yeah.
Don't be childish. Fight fair. Talk like an adult. Everybody's got issues. Everybody's got differences. But if you can talk like adults and work through the problem, then you're going to be better off.
Did it take you a long time to do that?
About 33 years.
33.
Just the past few have been good. Huh?
Yeah. And also remember, you can't fix crazy. We all have a little crazy.
Yeah.
Yeah.
We all have a little crazy.
Some
we
of
can't
us
fix
have
it.
a lot more than that.
Some of us have more than others.
Me.
That is true. That is true. And, I guess my only other word of advice is we all change a little bit,
Yeah.
and we have to accept the change and be gracious about it.
Mm-hmm.
And I know my wife's very gracious about me losing all my hair. So even though she looks at me like, why are you wearing that comb over? It's like, well, I'll answer that someday.
Yeah, Gracie messes with me on my hair, so we're not even gonna talk about it. It's like you. We'll answer that one day.
Mhm.
What about parenting? What advice would you give about parenting?
Oh my gosh. Oh, the simplest thing I can tell you is it's work.
Mm.
You got to have a good work ethic.
Yeah.
Some of those days, oh my gosh. So yeah, it's work. I mean, you have to work at it like a team. And the other thing I would say is, as a couple, as spouses, remember you all have just so much energy in the day, and where you can pick up for the other person, that's important. But it's also important to put your boundaries in there and say, I've worked all day. I'm really angry. I don't want to do something with the kids because I'll tear their heads off. And remember, you've got, those boundaries too.
Yeah.
So you can work together. But we kept the kids busy. My oldest two, they played junior amateur golf. So from the age of 8 and 6, we were all over the place. USAA kids playing little kid tournaments, and then in through high school and traveling all over the place. We went to the Optimus tournament in Florida, and they played on some PGA courses.
Wow.
And so we did a lot, and we kept them busy. And the other benefit was we had decided after my son went to kindergarten, a really nice school, really nice Christian school, that he wasn't learning anything. They weren't going to teach him what we thought he should be doing. So Julie raised her hand and said, "I'm going to homeschool him." And I'm like, "Oh, Lord." A lot of work.
Yeah.
But it was beneficial because they were through at 12 o'clock. They're very intelligent kids. They're very socialized kids, too. And they're very successful in their careers.
Yeah.
So it worked. And they got to travel with me because I traveled all over the nation all the time.
Yeah.
And so they've been, again, all over the country. Wherever we had a trade show or wherever I was meeting with a client. We had a client in Tampa, and they went there quite a few times, and they loved it.
Yeah.
Yeah, they loved Tampa, and it was fun.
Yeah, I love Tampa. Tampa's awesome. I'm a big Florida person. If it wasn't Oklahoma, or if it wasn't Texas, it would definitely be Florida.
Yeah.
Florida's nice. It's
Yeah.
a little sweaty for me.
Yeah, definitely
Yeah, a
humid.
little humid.
It's about as humid as Houston, maybe.
Probably
less.
the same.
Yeah, close. Yeah, it's
Probably the
tough.
same.
So we know that you're a big avid hunter. I want to know a little bit more about kind of your hunting background, and do you have an animal that you haven't taken yet that is kind of your bucket list animal?
I'll start with the last one. There's about 20 that are on my bucket list. I've got them all pictured in my mind on the wall.
Yeah,
So from African to I want to get a couple big drop tine whitetails,
yeah,
and of course I want to get a Sonora mule deer. Those 32-inch wide boys.
yeah.
And I started hunting with my grandpa when I was 5, bird hunting. Yeah, so that was fun. My mom hated it.
Were you holding a 410 or what were you?
It was pellet gun and a BB gun, and then
There
and
we
then
go.
to a
Okay.
20
I was
gauge.
about to
right?
say a 5-year-old with a shotgun. That's
I think
a
when I
little
was
scary.
8, I got my first break open 20 gauge
Yeah.
from Kmart. It probably cost $49 back then.
Kmart used to sell guns.
Yeah, yeah.
Wow,
No
that's
kidding.
funny.
Yeah.
And that's where I started. And then I still remember the one day I came home from, I was in high school. Yep, I was in high school. And had driven over to one of my relatives' properties because I knew there was deer there. And I was a bow hunter back then because I had time to scout. And I took this nice deer, and I come home. It's probably about 8 o'clock in the morning. I'm hanging this thing up, and my mom walks out. She was cussing mad. What is that blankety blank thing doing hanging in my blankety blank? And I'm like, Mom, it's my first deer. Be nice.
Wow.
So in the Northwest, we had a lot of opportunities for deer hunting,
Yeah.
and there was no such thing as a lease. And back in the day, the logging companies would let you go in.
Really?
Yeah, all the time.
Interesting.
And I got this one huge buck. This one day I was No, it wasn't skipping. Chemistry class wasn't quite ready for me. And it was the day before a test, so I was ready. And I went out and was stomping around, and we just got some new snow. And there was this herd of deer going up this hill. And Sweet Home, Oregon is actually where it's at. And they had this place called Molly's Buns. That's really why I was attracted there. They had this bakery that sold these baked goods and cinnamon rolls as big as your head. And back then I could eat everything, right? Everything. And I see this deer, and I didn't know it was didn't know it was a buck. I was going to take anything because it was his last day for me.
Yeah.
And so I'm kneeling down underneath this cedar tree, and I shoot this deer. And it was an easy shot, 20 yards away. And I see this limb moving in front of me. I'm like, oh no, I nicked the limb. Oh no. And I see this buck then that I'd shot at. Didn't know it was a buck because his horns were in this brush. He starts stumbling. I look closer. The arrow had actually lodged right behind his ear. Stunned him. So he takes 2 more steps, clears the brush, and I shoot him in the heart. And then he falls in the pond.
Oh.
By the time I drug him out of the pond and it was snowing, it was about a mile back to the truck. I was
Soaked.
soaked tired,
Yeah.
but I'm still 17, right?
So
I'm
you're
like,
still moving.
I'm still moving. I'm bulletproof at 17.
Yeah.
I could squat 450, not kidding, at 17. I could dunk the ball still at 17.
Wow.
And so I couldn't get the buck in the back of the truck.
Because you're so heavy.
And I was so tired. So I pull the truck out in the middle of the road, and this big log truck comes screaming up the road, slams on his brakes. "What are you doing there, son?" Said, "I just got a deer. I'm so tired I can't get in the back of the truck." He walks over, picks it up, and throws it in all by himself.
Dang.
So that was fun.
That's
so
a true
I have,
logman for you.
yeah,
Yeah.
he was a tough old boy.
Did he have overalls and a plaid shirt
He
and
did.
everything?
Yep.
Looked
he
like
did.
Paul Bunyan.
He looked like Paul Bunyan.
Yeah.
And so I grew up doing that, and then it expanded as I had more opportunity.
Yeah.
But with the kids, I didn't have as much opportunity.
Mm-hmm.
We were busy with golf and everything else, but it was still fun, and did a lot of duck hunting, a lot of goose hunting. Up in the north, you can get into a lease that was really fairly affordable. So all my kids hunted with me, duck hunted with me, and deer hunted with me. Never took them elk hunting. But
How many times have you gone elk hunting?
I can't count.
What would you say to a wife that you would want to go elk hunting and she hasn't given you the blessing yet?
Pray. Pray a lot. Or the other thing you can do is you'll actually have to, save up a lot of money. And
Yeah.
because elk hunting now is not
cheap.
$5,000 plus.
Yeah.
So,
And if you bring your wife, she can come for an extra 1,000 just
I
to
mean-
stay in the quarters.
And
That's true.
And go with you on the hunt. I mean, who wouldn't want to experience that?
well, my wife, when we were engaged, she went elk hunting with me a couple of times. And she liked to shoot a bow, and she's pretty darn good at it. And I had her in a blind in front of me, and I was sitting behind her cow calling. And back in the day, we had Walkmans, okay, those things, with you put the cassette tape in and stuff. And
Yeah.
Wow.
I said, "Here, wear one of these and just wait." And she stood up and said, "I am so bored." This, 45 minutes into it. Of course she's bored.
Yeah.
It takes patience to do this. And I said, "Shh, sit back down." And about 3 minutes later, she stands up again. I'm ready to go. I look up past her, and there's this elk about 20 feet away. She
Oh.
doesn't see it because she's so bored.
Yep.
And I'm like, "Oh no." And of course it takes off. So you have to really think about taking somebody who's not a hunter with you.
I'm backtracking now. Yeah, I'd rather not. No, I'm just kidding. But okay, do you have a favorite elk that you've taken or favorite place that you've elk hunted?
My favorite place was probably Mount St. Helens, actually.
Where's that?
That's in Washington.
Okay.
So, after the big blow of Mount St. Helens, and it changed the topography quite a bit there. And it's strange the places you'll see the elk. So they used to, be in certain corridors, and they'd feed down, certain timber lines. Now they're all over the place. So that's a lot of fun. Pretty steep country, but a lot of fun. And I did have a lot of fun one time also in Montana with my buddies. And that was a story we're not going to go into because it takes too long. But quite an experience.
Yeah.
And the thing about hunting is it builds character. Whether you do it one day or 120 days out of the year, it builds character because you're walking around in usually terrible terrain, not nice weather,
Yep.
and you got to have the chutzpah.
Yeah.
And I think
Chutzpah.
the chutzpah, and that, and that's one thing that it takes in life is to be able to grind things out.
Yeah.
And so it does add character. So if there's anybody out there, couples listening, and one of the spouses wants to hunt, encourage them to do it. Builds character. And don't take it as a payment. Well, then I get to go. No, you don't get to go. You're helping your spouse to build character, and that's important
Yeah.
because they're going to be a better spouse.
Babe, don't you want me to build character?
I've seen you build character many times, and I appreciate that you continue to build character. in
No,
hunting.
she's awesome. She did finally give me the blessing, but it's all on me now raising the money to do it. So I'm going to attach a GoFundMe. No, I'm just kidding. I'm not going to attach a GoFundMe for that. But that is so cool. Well, we really let's kind of move back towards kind of the work area. Do you have a big or have you had a big mentor in your life when it comes to doing home equity conversion mortgages?
There was one guy who started. I started in a retail company, and he was pretty well known in the industry. And we joined together because I know most of financial advisors and broker dealers, and we were walking through their process of helping them understand how this can be used.
Yeah.
And so I thought he was very instrumental. They had a really good processing team, and I was there one day, and I'll tell you why I changed to wholesale. So I was one of my insurance buddies at Country Financial. He's referred me this couple, and part of the financial plan was to retire. By the way, she was getting forced out, so she had to retire, and they had enough money to live on, but they couldn't make their mortgage payment and live on the money. So what we did was we knocked out their mortgage, so they didn't have a mortgage payment. They used a home equity conversion mortgage. And in retail, it was not a good situation, but it was okay. They had to come up with money because they didn't have quite enough equity. So they had to come up with $72,000 in retail. I called my old sales assistant in the software company who had went off into wholesale mortgage. And I said, hey, can you run it through your wholesale division? He said, sure. I was just curious. Wholesale division only charged $60,000, but they had to come up with 60. So the difference of $12,000 went to the retail management, right? Behind the scenes, because we all use the same interest rates.
Yep.
We all use the same paper, but it's the fees they add behind the scenes because they have to pay employees. They have to run companies and pay for buildings. But when I saw that, I switched over to wholesale that next week because I can benefit my clients more.
Yeah.
And anytime I'm in competition with retail, I bring so much more money to the table for the clients.
Yeah.
And it's been a blessing. So I'd say that's where I started. And, I tried to work with a lot of financial advisors and Medicare folks and property and casualty people because they know what's happening with the client. They know if they're hurting or what's going on. So it's been fun.
Yeah.
And I opened up my own company this year.
That's awesome.
It's called Hero Loans. That was quite a character building experience.
Yeah.
One way to say it. Getting licensed in the States is challenging. I mean, it's doable, but it's the government. You're working with the mortgage associations in each state, and they are slow. They take a lot of smoking breaks.
Yeah.
I think they're union or something. They take a lot of breaks because the paperwork never seems to move very rapidly. So, in fact, one state, it took almost 6 months.
Wow.
Yeah.
So what states are you licensed in to do this type of
Texas,
loan?
Oregon, and Washington right now.
Okay. Awesome.
Do you have a plan for the future for more?
I do. Florida will probably come on next. I was licensed in Florida for quite a while, just didn't do any business. And then I think I've got some friends who also want to do something in the Dakotas. Okay. I'm trying to stay out of California.
Yeah.
It's too difficult and that type of thing. And I'm looking to hire down the road 7 more people like me who want to do it.
Yeah.
And being 1099, it's really beneficial if you're a small company because the amount of taxes you can write off, it's amazing.
Yeah.
Yeah.
Absolutely.
Yeah. So, and I work with a lot of banks too. So the banks they're regional. And so I can cover the states I'm in, but I want to be able to expand. But at the same time, I don't want to travel as much.
Yeah. So what do you want the listeners to recognize about how they can get someone who needs your services in contact with you? What kind of person, what kind of situations do you want them to be aware of that someone could utilize what you're able to offer?
Sure. Well, if you're a realtor out there and you're listening to this, do you realize that, again, there's $12.5 trillion of equity in seniors' homes?
Yeah.
And they don't want to move because they don't think they can afford a mortgage and they don't want a mortgage payment again, which most of them cannot afford a mortgage payment again because they're on fixed income. And then we got all the other tragedies that happen in life to seniors. But if you're a realtor out there, you should ask a couple questions. First question is, are you comfortable where you're at? And this is something you want to pass to your kids? Because if they want to pass to their kids, there's no guarantee unless they have long-term care insurance or a lot of money that the house is going to go to the kids. And what I mean by a lot of money, if they don't have at least $400,000 that they can spend in assets, it's probably not going to go to the kids because the average nursing care stay is $200,000.
Wow.
And the average medical bill is $200,000 over and above Medicare. My dad has a $120,000 lien on his home because he had a triple bypass. And Medicare doesn't pay for all of it.
Wow.
So it happens. So that's one thing. And ask them, do you have enough monies set aside? Because if they can sell their big old house and move into a nice, comfortable house, oftentimes there's a lot of money that they're not spending for the down payment because they have to have about 60% down for down payment. So they save the other $20,000, $30,000, $40,000, $100,000 and put it in the bank for those instances in the future.
Mm-hmm.
So if you're a realtor, it's really important to start thinking about that. And no one I know in Texas, and call me if you are, because I want to talk to you. No realtors in Texas do I know are focusing on the downsizing market as their primary market.
Yeah.
Nobody.
They're all looking for the upsizing or
Yeah.
the
Do you feel like
first-time
that's a
home buyer.
huge market to tap into?
Oh, absolutely it is. And we're doing it right now. We're running ads right now. And we're working with specific realtors and we're running their ads for them. And so we're getting some traction.
Wow.
Mhm.
And we're not getting mom and dad to look at it. We're getting the kids
Yeah.
to look at it for their parents.
Mhm.
And they're very interested to make sure mom and dad are safe and in a safe place.
Mm-hmm.
So that's been something that if you're a realtor listening, please call me. I'm sure you'll get my information later. And I'll walk you through kind of some scenarios I'm seeing out there. And it can benefit you because there's two transactions in it usually.
Mhm.
There's a sell and then
And a
there's a buy.
Yeah.
Which is beneficial.
Yeah.
Right. Absolutely.
And then, of course, the other thing I think we all should consider is where are we at financially? You know, do we have 1.2, 1.3 in a brokerage account? Do we have rental properties that are producing residual income? If we don't, we should really consider using the equity in our home when we're that age, 62 or over, to help us in retirement. Because unless you're going to sell it and move someplace, why not use your equity? Because it's not working for you now.
Yeah.
Put it in something that's going to produce income for you.
Mm-hmm.
Put it in buy long-term care insurance. Ensure that you're not going to have to go to a nursing care facility. You can have in-home care
Mm-hmm.
and have somebody take care of you in your house, which is far cheaper.
Yeah.
And if you have relatives out there who are just struggling with credit card debt or repairs needing to be done in the house. We just closed a loan 2 weeks ago. She'd owned the house for about 15 years and it needed some repairs, foundation repairs. The roof's going to need to be replaced, those types of things. And she wants it painted. So we were able to do that for her. And she has now a big line of credit that she's doing those minor and major repairs with now. And then she's going to have money left over for that long-term care instance because she's not in good health and her husband's not in good health either.
Mm.
So look for those types of folks out there because
Mm-hmm.
there's a lot of them. Or right now, we get the calls, hey, mom and dad are making minimum payments on their credit cards. And they need the roof repaired and we can't get bank financing,
Mm-hmm.
can't get a HELOC, can't get anything. So when their debt to income's messed up,
Yeah.
this is an option.
Yeah.
So
Home equity doesn't care about their debt to income ratio at all.
no,
Wow.
they do care if they don't pay their property taxes,
Yeah.
don't have homeowners insurance, or if they have a lot of missed payments.
Mm.
So, and revolving usually.
Yeah.
So if that's the case, then the second scenario is if they have enough equity, the loan will work for them because like with my friend down outside of Houston, she had enough equity in her home. They set aside in an escrow account her property taxes and homeowners insurance for life. So they're paying those for her for life.
Yeah.
So she doesn't have to worry about that.
Yeah.
So those type of people we can help too.
Yeah.
And, this is really a mission for all of us
Mm-hmm.
to break this cycle of what we're seeing out there, which is poverty.
Yeah.
There's a cycle of poverty that continues from generation to generation because they don't read, they don't look up things. They're not trying to find information to help themselves. They just want to listen to what the TV tells them or what a politician tells them. We need to break that cycle because I'll tell you a quick story. I get this lady, and she has a small house in Fort Worth, and she's raising her granddaughter and the two great-grandkids in this small house, and it's run down. It is beat up, and the floor is going to need to be repaired too. And all part of what FHA does in these loans is they bring it up to the right standard, okay? And they use the equity in the home to pay the contractors to do it. And so I'm sitting down with her the first time, and I said, here's what I see. Here's what's going to happen. I'm going to come back with the documentation. I want you to read the proposal, and the proposal is the worst-case scenario. And they really are the worst-case scenarios. I mean, I'll tell you about those later. But she said, my son doesn't want me to do it because he heard from his friends that his parents got gypped. And I said, here, go to the HUD website, hud.gov, and search the word HECM, HECM, and give him that information, tell him to do that, and we'll meet him here next Tuesday. He needs to be in the meeting as well. He didn't show, she didn't show.
Mm.
because they still believe the fallacy.
Yeah.
They still believe the lies.
Yeah.
Well, that house is going to go to Medicaid when she breaks her hip,
Yeah.
and they're going to be in that same cycle of poverty because she's not going to be able to pass that paid off house
To her children.
to her children or her grandchildren.
Mm.
So we need to start being concerned about our communities too, because that cycle of poverty is real.
Yeah.
And until we can break it, it's going to continue to be there, and it's going to hurt people and hurt their
Mm.
families, the next generation, and then the next generation. Well, how did the wealthy people get wealthy in this society? They didn't steal. They worked hard. They bought properties.
They
They bought
passed it
life
down.
insurance, and they passed them on,
Yep.
Mm.
Mhm.
right?
That's the one thing that I really try to tell people when it comes to either purchasing a home or, in your instance, I'm learning more about the Heckams, but it's just being able to pass down a home to a child or multiple children. That starts them off so much further in life
Mm-hmm.
than anything.
Yeah.
Like I'm a true believer of this. I think in the next, I don't know how many years, but at some point, a first-time home buyer in Texas will be non-existent because they're going to be 2 hours outside of the city. It's crazy how far Texas or the DFW is just expanding.
Yeah.
But it's like you're not going to be able to find cheap homes anymore within the DFW market. If you are, there's going to be 100,000 offers on it, and more than likely, an institutional investor will buy it with cash
Yeah, we see that all the time.
and flip it, or they'll make it a rental property.
Yeah.
So I think just home ownership in general, and then now securing it at the end of the life cycle
Yeah.
to be able to pass it on to their children, it just starts so many people out. Like that was our game plan with
Right.
the investment properties that we have, is to be able to give one to each child after they graduate or something, and be like, look, this is yours, or we'll keep it and we'll let them live in it and, pay rent and whatever.
Mhm.
But then just be like, after we're done, like we're able to pass that on to them to be able to set themselves up for success in the future.
That's
You
right.
know?
Then the other market that I see is a really opportunity rich, and people should really think about this, is if your parents or grandparents need in-home care, because they do. And if they need in-home care, be it 3 hours, 4 hours, all these in-home care agencies charge about the same. Okay, it's from $24 to $39 an hour. It's not cheap, but it's better than $6,000 to $7,000 a month if you go to a nursing care facility. So if you want your grandparents and parents to live a better life, they're far healthier in their own home. And if you can have in-home care come and take care of them, they're even better off because they'll live happier, healthier.
Yeah.
It's statistically proven. And 88% of seniors want to have in-home care. They don't want to go to a nursing care facility. Who does? It's a terrible place to go. Sorry if I offended anybody, but if you can keep from it. So this is an opportunity, if they own a home, to use equity in their home, which was the purpose of this loan. Remember when Ben Carson said we want them to age in place and use in-home care?
Mm-hmm.
Use the equity from your line of credit, from the home equity conversion mortgage, to pay for your in-home care.
Right.
Far cheaper,
Yeah.
especially when most people can't afford long-term care insurance anymore. It's so
Correct.
expensive, and there's few carriers who are doing it. And for those who are, they are doing what they need to do, which is great.
Mm-hmm. Yeah. I feel like the biggest point on this is just the education factor,
Yes.
because I feel like, and I don't know if it's society or, who to blame, but I feel like seniors and just people in general are very uneducated about this topic.
Correct.
And they don't realize what situations they're putting their parents into or their
Mhm.
grandparents into when they're just allowing things to just happen.
Yeah.
Yeah.
And there's no, like you said, they're not doing the research. They're not staying educated. So I appreciate you coming on to the podcast specifically to educate people about this. And hopefully
Yeah.
that not only, helps out your business and brings more people to your business, but again, just helps out, like you said, that cycle
Mm-hmm.
of poverty, the people that are experiencing, their homes being taken and things like that, when they don't
Or-
realize that's what's going to
And not even that. It's just also like when the older generation gets older and they're living paycheck to paycheck, like scared that they can't eat, not paying their taxes. And it's just like the quality of life towards the end, you would hope, and everybody plans to have a more, I don't want to say,
sustainable.
yes, sustainable, but just better quality of life at the end. I can think of two people just on this conversation of who I think should talk to somebody about this and just get information on it, just based off of conversations. I think anybody can listen to this podcast and think, oh, wow, yeah, these people definitely need to talk to somebody about this, because that is this is a big deal.
Yeah.
Yeah.
Education, because if we don't plan ahead, so if someone told you guys, if you take vitamin C and vitamin B3, okay, methylated, by the way, you will live 20 years longer and healthier, wouldn't you do it?
Yeah.
Who wouldn't?
Yeah.
Right? Well, I'm telling you the same thing. If you don't address the situation with your parents and grandparents or yourself and say, how am I going to make it in retirement? Should I use the equity in my home as part of my plan? And then research how the loan works. Okay, it is safe loan now. It is made for people. And you're all going to say this. There's the doubters out there. One thing they always say is it's too expensive. Now, I'm not going to beat up on realtors, but is a 5% fee to sell your house expensive, or 3.5% to do a home equity conversion mortgage?
Yeah.
Right?
Yep.
And then I've got the financial advisors. Oh, it's so expensive. I said, well, this lady's 70 years of age. If we were to buy enough insurance for her to cover her home mortgage, if we do a regular mortgage, she's going to need $400,000 worth of life insurance. How much is that going to cost? Because at 70, there's no payments. It's single pay, single premium. So she'd have to come up with $380,000 to buy a $400,000 policy. So which is more expensive, the FHA insurance, or $380,000 out of pocket? So they're not expensive in comparison to what? Selling it to go to a nursing care facility and paying 5% commission to a realtor?
Yeah.
That's expensive. When if you planned ahead, you're going to keep the house and it's going to go to your kids and you'll age in place.
Or what's more expensive, losing the house.
Oh, right. Or losing the house to Medicaid too.
Yeah.
And, it's all relative, and they're not expensive loans.
No.
No, the insurance they force on it, it's not cheap, but it's there for a reason.
Correct.
And then the other thing we have to consider is this. We're not all going to live forever. And how do we want to live our lives in retirement?
Yeah.
Yeah.
Do we want to be able to age in place? Do we want to have a caregiver come in and take care of us when we can't take care of ourselves?
Yeah.
And that's something we have to consider, and we have to share this information, because if you go to HUD.gov and look up the word HECM, they give you all the rules. They help you understand what's going on. And then you have to go through counseling even. You have to go through FHA counseling to get approved that you are there mentally, you don't have dementia. You can't be pushed into this loan. You have to understand it completely. And if you don't qualify, you don't pass, you don't get the loan.
Yeah.
So, we should be able to break all those myths. It's safe, and they have to qualify. It's not that expensive in comparison to what, and your kids are going to get the house, and there's no mortgage payments. I've got a guy right now who needs all these repairs done in his house. He's been trying to do them for years, and he's in his 70s. That's a lot of work. So he decided to do this. He's getting all the repairs done. He's getting a new shower, new floors, taking care of his ceilings. His house looks great. Okay, it's all going to be paid for out of the equity in his home, and he doesn't have mortgage payments. Because FHA doesn't make money on these loans.
No.
They really don't. But they make money when people don't go on Medicaid.
Yeah.
That's where they make the money. They do sell this loan to the bond market, though, by the way. That's where they make a little point and a half, probably a point and a quarter.
Yeah.
Because it's an insured mortgage. They sell it to the Ginnie Mae bond fund. So
Yeah.
think about it that way, guys out there. They have to make some money, but this is safer for your parents and grandparents. Usually, if they don't have long-term care insurance or a lot of assets, this can be a real benefit to them and their family.
Right. I know a lot of people think that just paying into like a 401k and being able to like pull Social Security, which who knows? I mean, I've
Social
heard
Security
things
won't
about that
happen.
not even
Yeah.
being available by the time we're seniors.
Yeah.
But they think like, oh, that's all you need to do. That's enough to survive off of. And so many people get to like that point of retirement and then realize like, wow, like no, this is not enough, and I'm living paycheck to paycheck just to try to finish out, my life.
Well,
and
yeah. If you look at like the two big things that people invest in, 401ks and home, it's called a nest egg for a reason. So if you lose your job, can't do a cash out refinance,
Right.
can't do a home equity line of credit,
Right.
your only other option is sell it. And then if you sell it, you're not going to be able to purchase a home unless you can buy it in cash. And more than likely, you're not going to be able to buy it in cash, but then you're back to step one. So the biggest thing is be able to utilize this home equity line of credit to where you've done a great job paying on your mortgage. You've paid your house off. Use that equity and not have to have a scarcity mindset of something that you're going to lose it because you don't have enough in Social Security or your 401k is running out. Use that asset. And this is a great asset. You don't, to my knowledge, you don't need a job to do this, correct?
You don't. Nope, you don't have to be employed.
Yeah.
And they qualify people on their Social Security and their fixed income.
Yeah.
And we try not to use any other income sources outside of that. And I've done these where it's for example, it's a son and his mom who live in the same home. And he takes care of her. He's in his 70s and she's in her 90s.
Wow.
And for them, it was a great deal because he can still take care of her.
Yeah.
And so they did the home equity conversion mortgage using the equity. It's sitting there in a line of credit. The line of credit is earning about 7.4% interest. Earning like a money market account.
Yeah.
And so when he needs help, he can do that. He doesn't have to send her to a nursing care facility. He doesn't have to sell the house to pay for nursing care.
Correct.
And he's on the loan so he can live in the house until he passes. Yeah.
It's a
Pretty
great
cool
deal.
Deal for them.
Yeah.
Yeah.
So I'm here to help people.
Yeah.
And this is what we're about. And this is something, if we can educate and if we can focus on this, it's a good thing because I know nobody wants a mortgage in retirement. They don't want a mortgage payment because, again, cash flow is king and they don't have enough cash usually.
Yeah.
And every time you spend your 401k or IRA, it's taxable. So put your debt equity to work for you because it comes out tax-free.
Yeah.
Yeah. Absolutely.
Yeah, it's a benefit.
So I wanted to just talk a little bit about after everything that you've done, which you have so much experience in life, what's the most important lesson that you've learned over your career?
Oh, my goodness. Do what the Lord's called you to do.
That's awesome. Yeah.
What was the funnest job that you've done? Is it this one or did you
I'd say this career has been the best.
Yeah.
Sorry for
Yeah.
tearing up there, but
No, you're good.
this has been the most satisfying, I would say.
Yeah.
Yeah.
Fulfilling.
You get the cards, you get the hugs.
Yeah.
It's cute.
Yeah.
It's cute.
Because
I love that.
you're changing lives. I think homeownership is just owning a home. I mean, even the Heckham, you're still owning a home. You're changing lives
Yeah.
through owning a home. So I
Yeah.
think that's so cool.
Yeah, I think it's fun. It's a great experience, and I wish more people understood it, more people did it. You know, even in your role, doing mostly just forward mortgages, thinking about that when you go into it. And I've got a buddy, he's a master. He can get anybody into a loan legally. And and I was talking with him about, I said, I've got this client, he's 83, he just needs this and this. And he said, well, we'll get him a HELOC or a cash out refinance. I said, yeah, that's how you think. But you realize he's got kids he wants to pass his house to. And if he falls and breaks a hip, he's not making his mortgage payments. He's in the nursing care facility. So this way he can save the house for his kids. And of course, that's a different concept for a regular broke mortgage person to think of. But, if you're a regular mortgage broker out there and your clients are over 62 or over 65, really consider what's the best situation for your client long term.
What's the average lifespan of a human?
Right now,
Yeah.
82 for men and 80, I think, take it back, 78 for men and 82 for women.
Okay. So when should be a time to where most people have equity in their home to even think about doing this and not be afraid of running out of money or whatever?
65.
65. Because that's the age that it starts to, correct?
It starts at
62.
62.
62.
But
okay.
now they're going on Medicare.
Gotcha.
65.
Okay.
Right
Yeah.
now, they're going to try to change that too, but force people to go to 67. But I think 62 if you can, as soon as you can, 65 as soon as you can.
Yeah.
And realize you can buy up to a 3 or 4-plex with this. You could live in a 4-plex with no mortgage payments and collect all the rents.
That's really thinking right there.
Yeah.
That's good planning.
Yeah.
That is.
Our rent's here, so you'd be collecting $6,000 a month.
Yep.
That's yours. No mortgage payment. You're going to pass the house to your kids, the rental to your kids.
Mom and dad? No, I'm just
Yeah, no kidding.
Yeah.
I'm going to do it. That's
Yeah.
part of my plan.
Yeah. That's awesome.
Yeah.
Why
That's
not?
great.
Someplace nice too.
Yeah.
So to close out our podcast, we really like to hit on where you find your identity, where you find your worth. A lot of people struggle throughout life to figure out, who am I? What am I really here for? Am I here to just be a real estate agent, to be a mortgage lender? So what would you say that you've learned throughout your life about your identity and where your worth truly lies?
Sure. That's a big question, but the simple one is I've been given a gift to help people, and that's what I love to do. So that's what I do. And people do it in different ways,
Yeah.
and that's not a bad thing. And what I mean by helping people is I make sure they get the best from me that I can give. And the opportunity to do that is very broad now in the United States because we have so many seniors. And then, of course, biblically, we are under a new covenant, and God's covenant says through Abraham, Isaac, and Jacob, he said his covenant through Jesus Christ is to bless us. Bless us to be a blessing, though. Bless us to be a bigger giver,
Yeah.
to expand his kingdom. And that's what I'm about.
Well, that's awesome. I don't think there's a better answer than that. Well, we just want to thank you for being
you,
on the
guys.
podcast. We
bet.
really appreciate it. I've learned so much more about HECMs. I mean, I remember learning about HECMs when I was passing tests and stuff to be a
Right.
loan officer. But yeah, if you're old, no offense, if you're seasoned, look into HECMs. Seasoned's better. But yeah, we just really want to thank you for being on
guys.
this. And if you guys need to get a hold of him, let us know. Drop a comment below, and we'll be able to get you his information. I mean, like I said, I can think of multiple people just off the top of my head that would be a perfect candidate for this.
Absolutely.
Yeah. So we also want to give a shout out to Tap In Studios, where we do our podcast. If you're even thinking about doing a podcast, come check it out. Get a hold of them. It's a great opportunity, and we thank you guys for coming to this week's episode.
Absolutely.
Thanks.
Thank you.
Bye now.